U.S. hiring slowed in March, ending 12 consecutive months of job gains above 200,000, the longest streak of above-average employment growth since 1994. Adding to the weakness, job gains in the previous 2 months were also revised lower. But that's probably an aberration, says PNC Bank economist Gus Fauché on Skype.
We had a number of one-time drags that were factors, in particular the weather. So I do think that we will see job growth bounce back up to 200,000 or above, and that's a good solid number, and I think we'll see that throughout 2015.
Besides the weather, plunging oil prices led to declines in the mining sector, and a stronger dollar resulted in fewer manufacturing jobs. But a recent survey by the National Association for Business Economics suggests the U.S. job market is starting to tighten up. NABE spokesman Ken Simonson says that should eventually lead to higher wages.
Many business people report they're having trouble finding workers, and you would expect that to show up in their paying higher wages, either to bring workers in or pay more overtime.
The latest jobs data suggests that's already happening. Average hourly earnings rose 7 cents last month. It's not a lot, but Gus Fauché says that represents a 2.1% wage increase from last year.
That's much better than inflation given the huge plunge we've seen in energy prices. So consumers are seeing stronger incomes, and that will be a positive for consumer spending growth throughout 2015.
Investors didn't seem too worried about the latest employment data. Economists say that's probably because the weaker than expected job growth might cause the Federal Reserve to delay an anticipated rate hike until later in the year. Arcega, VOA News, Washington.